Fourth quarter performance was slightly below street estimates. This was led by softness in the industrial infra and the green solutions segment. Margins were under a little bit of pressure. The order inflow has also declined. Ashish Bhandari, Managing Director and CEO at Thermax, is with us to give us some trends. Ashish, hi, morning. Thanks so much for joining in. As we start, I just want to put the full year picture in perspective as well, because your business tends to be lumpy. It depends on order flows, one quarter up, one quarter down. For the full year, the industrial products business has grown 12%, industrial infra at 6%, green solutions, which is obviously a lower base for you compared to the other segments, it's grown 36%, chemicals 15%. Can you give us a sense, a broad overview of FY26? How are you looking at overall revenue growth for the company? And within that, what is your performance expectation from each of these businesses?
Good morning, Surabhi, and thank you very much for having me today. Before I talk about FY26, let me just very quickly put a stake in the ground on the last quarter and the year as a whole. As you said in your opening, there are a couple of things for the quarter that did not work out as well. First, on the order side, this was below our expectations. And I've been talking about having a good inquiry inflow. We would like to see that come in and converting into orders as well. Second was on the profitability side. There is actually a portion of Thermax which is working extremely well. And this is the majority of Thermax. You will see industrial products. We are now in the teens in terms of profitability. It has shown good top-line growth. Overall, we have shown a good ability to take our backlog, convert that into revenue, and make sure that that revenue is profitable. Our earnings got hit because we took in a significant hit against a Bio CNG program. This has been a new initiative that we've been running for the past 2+ years. And this last year, we had significant losses against this segment. So for the year as a whole, we have taken 150 crores of losses against these Bio CNG projects, which should now close the chapter in our mind, at least on these projects. And we look forward because this whole segment can be a long-term growth segment for Thermax.
So Ashish, on that, Ashish, sorry, I'm glad you actually brought that up, and it'll really help viewers understand. Sure. The losses in this Bio CNG project, which impacted Q4, was that a one-quarter hit, or will some of that trail into Q1 as well? And there was also, I believe, the product mix and pricing in the chemical segment. That also led to the EBITDA level performance slightly lower than street estimates. Just your thoughts.
So the Bio CNG one, in our mind, is now a chapter that should be behind us. It is. So a lot of the hit that we took in Q4 was with reference to actions that we will take and coming into agreement with our customers with these actions. Most of our liabilities would be done and closed for. So I don't expect anything remotely close to the year that we have gone through going forward. Second part on chemicals. Chemicals is a good story for Thermax, and we'll continue to grow this. It grew 15% last year. We think it can grow much faster than that. We have a brand new plant which has come into play. So the depreciation base will go up, but we are actively looking to increase capacity. We have done some M&A. We have started teams to grow into newer areas. So all of those costs have been built into, and we have still delivered the profitability that we did in chemicals. So with that, if I now look at FY26, I think the first thing we need to do is make sure our order book improves, especially where industrial infra is concerned and larger projects. Here for the last year plus, knowing that historically there were some kinds of projects that we were not doing very well in terms of executing, we have been taking a step back, waiting for some of the things that we can do better. And our pipeline for even those kinds of projects is quite good. So I'm hopeful, but we need to convert that hope into numbers, and that I expect to see starting Q1 itself. Right. Second part, some of these one-time costs, etc., that we have gone through, seeing less of that happen. And then many of the growth engines that we have that are working well, we need to make sure that they continue to do well. I also expect to see a bit more international business coming in FY26. So quite optimistic and looking forward to the year.
Yeah. Ashish, hi, good morning. Prashant this side. So can you crystallize that into numbers for us? What will FY26 look like in terms of the percentage increase in order inflow, top line growth? Just give us some numbers, crystallize those into numbers. Yeah.
So we don't share forecasts going forward, and given how there's still a lot of macro movements going on, so it would not be right to share. But if I break it up into the four pieces that we have, industrial products, we've been showing steady growth, decent profitability. We would want to continue to be on that journey throughout. Industrial infra, we have been extremely conservative. We have had a few quarters where our order books have been lower. I would like to see that go up. And we do see in steel and power and international and even refining and petrochemical, the base starting to build. Yeah, now we need to see this inquiry flow show up into orders. Chemicals, we would like to continue to grow 20% plus going forward. Green solutions, we will be conservative. We will go slow in areas where we think profitability may be challenged, but we want to continue to be on a growth path for that business as well. So that's how I would look at the year. Would love a year where there is stability on the execution side and an acceleration on the orders front.
What about industrial products and industrial infra? You said chemicals this year should grow at 20%, but the two big chunks of the business, what's the growth visibility? Some numeric rough ranges, perhaps, I think 15%, 20%?
Look, I think we can just go through the year and take it quarter by quarter, and especially industrial infra, where you tend to get bigger projects where kind of they can be 0 or 1. Let's just go through the year and we'll see. Yeah, all I can say is we're starting with a decent inquiry pipeline, but I said that for Q4 as well. We didn't do a good job in Q4 in converting that pipeline, but I'm still quite bullish on Q1 and the period going forward.
Okay, all right. You're taking that on board as well. Last quarter wasn't as good as you expected. Hi, Ashish. Good morning. Good to see you. When you briefly mentioned about exports, right? The international business. I think out there it was around 23%. In the past, you've said you would like to be around a fourth of your business. For this year, what kind of a contribution are you looking at from exports? Point number one. Point number two is what kind of growth you're factoring in out there, because the globe is a very, very different place right now. You have tariffs, you have geopolitical tensions as well. What kind of a growth estimate you have?
So you're asking me the same question in 2 or 3 different ways. So I'll try my best to give the same answer I've been giving.
That's not
look, the reason
that's not fair.
Ashish, you have to. I mean, you.
Ashish, you briefly mentioned exports, right? So
yeah, let me
simple points. It'll be a fourth of your business for this year as well?
It can be more than a fourth of our business. More than a fourth of our business.
So exports will outgrow what domestic business is likely to do?
I think exports can be faster than our domestic business. On the domestic front, the reason I'm more bullish perhaps is that on industrial infra, we have been very quiet. Yeah, we have been subdued in our order intake, and the pipeline is continuing to build. April, we have had a couple of medium-sized successes. I would think we can have a good year of industrial infra. We can have wins where the pipeline exists to get those wins. Yeah, right. So which gives the confidence. And chemicals, as I said, we have done a lot of work to have newer engines coming in. If I add all of that up, it gives me a reasonably bullish overview of what this new year can be like.
Ashish, we've spoken about this in the past as well. You know, the large projects are no longer there, right? I mean, chunky, which used to be the case 10 years, 15 years ago, they're much smaller in that sense orders. Still meaningful, but it's more disaggregated in that sense. That continues to be the case, right? And of course, I mean, the point is, in terms of capex from companies, are we really seeing a big push coming through? Not really. You'd agree with that, right, Ashish?
I would say I would agree with that. But when I see multiple sectors, which I've been saying, we would love to see steel, power, refining, petrochemical come into play. I think now that inquiry pipeline is building up. If I just say how many projects we have that are 300 crore plus, we have more right now than any time last year. Yep. So So that gives us some amount of confidence. And as I said, the international pipeline, which is something we've been working towards, is also better than what we have had in the past.
Ashish, to the often asked question, very briefly, last 10 seconds left on the interview, to the often asked question, is private capex picking up in India? What would you say? You have your ear to the ground. You talk to the buyers on a daily basis.
I would say more talk, where everyone has got projects lined up. We would love to see some of those projects convert into money on the table. Yeah, that's how I would put it.
Okay, so there's a lot of talk, there are inquiries, and you'd see a lot of that talk translate into real orders as well as we go forward. Thank you very much. Really a pleasure having you on the show. Thanks for explaining all the details on Q4 and the outlook ahead. That is Thermax. We have to take a